we're very upfront about it. If we feel like that's the case, we'll talk to the right people about it, usually investors and maybe the board. There's no point in dealing with people if you can't be transparent about it. So, if we do something that requires a management change, then we'll take a very active role in recruiting people to come on, no doubt. I think that's part of the value we have in the process too. So that's something that we're very accustomed to. I mean, we started out originally in 2004, doing a lot of restructuring and restructuring work, and that's a business, unfortunately, which is replete with management changes, and we've been involved in more than a few activist type situations, whether it's proxies or just disagreements. So it's unfortunately a part of the business sometimes, and but if it has to be done, it has to be done.
And if the incumbent management doesn't want to work with you, what happens then?
Look, I mean, we don't want to, you always need to be in a situation where something needs to be executable. I mean, I think, to be quite honest with you, the way we see every company is its main constituents are the investors. So, the way we usually deal is we talk to the investors. We don't, we know, I think, a pretty good proportion of the people that control the space, and if we have specific thoughts, we let them know about it. If they agree with us, then there's probably things that can be done, and if they don't agree with us, then there's nothing to do. That's pretty much it.
Do you, in terms of sort of the long-term strategy for some of these early-stage mines or junior companies, is an acquisition down the road, is that a major consideration?
Look, if it happens, it happens. But it's very hard to bank on that, I think, a lot of people say, we'll exit through a sale, and maybe you will, but, the number of sales is always a lot less than the number of people that want to be sold. So I think you have to invest in knowing that, you might have to sit in there for a while, and if you are investing with an eye toward the sale, then you have to really do your due diligence and understand why somebody would want to buy it. If you want to be able to sell something, I think you need to have an asset which has some sort of uniqueness to it. So whether it's a gold deposit, which is really truly world class, and maybe has a lot of potential for growth, or you have an iron mine which is ramping up to a good amount of production, in which case a lot of steel makers or trading houses or maybe other iron companies would take an interest or something like that. But there needs to be a very concrete reason, and you need to be honest with yourself about why somebody would want to buy your company. There's a lot of guys with projects. There's very few deals in proportion to how many projects exist. So, the people that get sold, and are successful at it usually have something unique about their company. Like, when Redback sold itself to Kinross, or Andean sold to Goldcorp, those were considered to be unique deposits. When Consolidated Thompson, because there just aren't that many gold deposits that can go into tens and tens of millions of ounces and can be mined profitably. When Consolidated Thompson sold to Cliffs, there aren't that many iron mines coming on stream that can be producing 16 million tons a year in a reasonably short amount of time, and particularly with access to infrastructure locked up. So it was only a question of time before those guys were taken off the market. But again, I mean, I think and that probably figures into a part of our reasoning as well. Before we deploy money to anything, is why would somebody want to own this? I think you need to be very clear as to what is the thesis. Just having a project with some stuff on the ground, which may be okay but not unique, I think is a very tough way to go about things.